All right. Yeah, we've moved our Monday night because of the holiday to tonight, just so we can kind of catch up on things. Because I'm going to be out of pocket for the next 3 days. I'm going to a honorary dinner for one of my fraternity brothers in New York City. And I will try to get on a computer at night and at least have some pics out there and maybe be able to get into the chat room during the day. I'll have to see what the connections are over there. Let's see, if you're getting contacted by our training group, Steve Rasky, yeah, he is with us. And the process there is we've discovered in the past that even though I try to teach people everything I know about candlesticks, that sometimes my teaching methodology or my teaching process just doesn't light the candles, if you pardon the expression, and everybody. So this is a professional training group that has been following what we've been doing for the last couple of years, and we've contracted with them to take the information that I teach and teach people in a different method, their teaching method, which has a very great, or very good techniques for getting through to people. So, yeah, if you're contacted with them, they are with us. Just trying to get people a different perspective on how to learn candlesticks. Let's see, there was something else I was supposed to announce, and I guess I've already forgotten it, so I'm sure it will come to me sometime. All right. Let's see. Whoops, I almost had it. Nope. Thought I had it. Let's see. Duluth, I'd hate to think of what's going on up in with the weather up in Duluth. Okay. I've had a few requests from some new folks saying, can you go over more of the signals? And I probably I'm a little bit lax on that because I've looked at the signals so long that I forget other people that are just looking at them for the first time might not fully understand what they mean and how to interpret them. So I'll kind of produce some charts tonight that we can at least analyze and go through the process of what the signals are actually telling us and then what our confirming indicators are showing us. So part of her, I guess a major portion of my trading methodology is if the candlestick signals are the cumulative knowledge of everybody buying and selling during a particular time frame, it's relevant for analyzing the indexes as it is an individual stock, commodity, currency, or anything else. So right now, if we look at what the chart or what the markets are doing, we can pretty much see they aren't doing much of anything. They're kind of in a wedge formation, which once you understand that, or once you can visually analyze that, now you've got the capabilities of saying, all right, if this goes up, it may only go up a little bit before it turns around. So, oh boy, let me see. Whoops. Dang Jiminy Christmas. At 800 service just will not give up. I'm pretty sure we're on a no call. That's enough to make you kick your grandmother. But anyways, as we can see, there's kind of a channel forming or kind of even a wedge formation setting up. So there's really no direction in this market. So what does that tell you, or how does that help your analysis? Well, it helps your analysis in saying, well, if there's no real direction in the market, we probably don't want to be predominantly long. We don't probably want to be predominantly short. So this is a area where if I'm out there, I don't know whether they're going to take this market slowly down or whether they're going to pop it back up here, but it doesn't really seem to matter. There's stocks out there right now that are still acting strong, and there's stocks out there right now acting weak. Out of a 10 position portfolio, I want to be short 5, I want to be long 5. And the nice thing about candlestick scanning techniques is that in the matter of a few minutes, your pre-formulated scans can come up with the best stocks to be looking at as far as the long side or the short side, no matter which way the market's going. So you're always going to be able to find 5, 7, 10 good longs in the market out of 78 or 8,700 trading entities. You're always going to be able to come up with 5 or 10 good short positions in the no matter which way the market's going. So when the market's moving sideways, like it appears to be right now, you just have to acknowledge that any type of trading you do is probably going to be a lot more shorter term than something like over here, where once we saw the big reversal signal, the Morningstar signal down here, and a close above the T-line, we knew we were in an uptrend until we got up here where we had a candlestick sell signal and a close back below the T-line. So how do you know that this downtrend isn't going to last all the way back down here? Because once we got to our oversold condition and we saw an inverted hammer, which is one of your 12 major signals, and it confirmed the next day, there was an extremely high probability we're going to be heading up. Where did it head up? Right here, or not probably, right here to the top of this channel. And what type of signals did we see up here? And this is why I always say, watch to see what type of signals you have once you get to a support or a resistance level, because that's going to tell you what the investor sentiment is at that time. Little shooting star doji, shooting star doji, doji. We know those are indecisive trading, and they're occurring at a spot that kind of represents a resistance level. We should, and the stochastics are up here in the overbought condition. That just gives us more of an inkling to say, all right, we should be ready to start taking profits if it starts rolling over. And if it does, where is it likely going to come back to? You know, it could come all the way back down here. In this case, it didn't. But in this case, here's, let me make this big enough. This is very cutting hairs, but notice how this opened slightly above where it closed the previous day and went up. That is not a reversal signal. So in this case, you have to be a lot more cautious or a lot more conscious of the fact that if there's no reversal signal, it might just be a bounce in case it was, or in this case it was. Now we had pretty much a bullish engulfing signal. Today, as you saw, they opened it up, took it right back down hard, and then closed right within a point of where they opened it, doing a doji. Same scenario with the S&P 500, kind of a doji hammer right on the T-line, and the NASDAQ doji just above the T-line. So what does this doji basically tell us about our investing prospects for tomorrow? Well, if we know what each signal or what each formation is, that it is a signal, in this case a doji, and we know the simple rules of each signal, and the rule of the doji is it's probably going to move in the direction how they open it tomorrow, that tells us two things immediately. That if the market opens weaker, that means the T-line is still acting as resistance. We're still in this downtrending channel. If the market opens stronger, we've got the potential of a doji sandwich, which means our next target tomorrow could be back up to the 50-day moving average. So do we know which way this is going to move? Absolutely not. But when we see what type of market or pre-market futures are telling us, now we've got a pretty strong inkling based upon what each signal tells us of which way the market's going to go. Let's see. Out of all this, the transportation index did act very strong today after a bullish engulfing signal. And it was acting pretty strong during most of the day, which kind of gave us that indication that this market was not falling out of bed. Even though the S&P and the Dow were trading off, the transportation was trading positive. And if this market was rolling over and heading down, it's usually going to do it with all the indexes in conjunction with each other. When they start showing a little bit of disparity between one index and the other, that pretty much tells you the market trend isn't doing anything different. It's probably still in the same trend that it was previous. And currently, this market trend really isn't telling us too much of anything. So today's trading didn't really tell us too much of anything. All right, let's take a look at a few of the other things that are influencing or could influence the market. Crude oil prices. Notice what's happening right here. Morningstar signal. Did not confirm. Another day up, but notice this was not a reversal signal. And then today right back down again. So remember, a doji is where there's indecision between the bulls and the bears. Up, down is also indecision between the bulls and the bears. So we still have to see which way they're going to break this. If they open this lower, all this was consolidation during a downtrend like we saw up here. They could still be taking this lower. Now, if they take this back up and do another big signal, that tells us this indecision, especially down here with stochastic starting to head up, was showing that there was still lots of fighting between the bulls and the bears. All we're doing right now is seeing who's winning this battle, which way are they going to take it out of here. Now, if they take it down, you got one side saying, yeah, that's great for the economy. Then you've got the other side saying, they're already laying off tons of oil field workers, which was the strong sector through all this recession for the last few years. They're starting to lay them off. That effect of saving a few bucks every day at the gas pump better be pretty strong to offset further layoffs out there. Let's take a look at some of the other ones. The dollar. Dollar, as long as it stays above the T line, it's staying strong, which also means the euro still in a downtrend. Let's see. I think the bond prices, 10-year note, still staying up above the T line. Want to stay with us. Now, somebody was asking today if I could address the other, what happens when there's a few signals. Remember, one signal tells you there's a change of investor sentiment or possible change, so it doesn't matter how many signals are in here. This is what we call a Morningstar signal. And notice it had a doji, and then a day where it closed more than halfway up this candle. So this makes for very simple entry and exit strategies. What do we want to see the next day after a candlestick reversal signal? We want to see the bulls are still there. If the bulls are still there and taking this up, they're also confirming the fact that the T-line is not acting as resistance, that this now has a potential move back up to the top of the trend channel, which it bobbled here and headed right back up. But this was a good time to be buying the bonds. Now, anytime you look at a chart, you can come up with all sorts of reasons why this might be a resistance level, this might be a resistance level. The main factor is, where are we in our trend? What type of signals are we seeing, and is it confirming? Don't let a resistance level be your deterrent for not buying, because we still have the capabilities to see what is happening on the type of signals or formations that occur at those I forgot what I was saying. What type of formations you see at a breaking through a resistance level? Yeah, this recording, we usually record Monday and Thursday nights. And I think Jim probably has the link to show you how to get them later on. All right, let's see what else. Right now, I am short lean hogs. Now I wasn't. I was short until the end of the day, and because I was going to be away for a couple of days, I had asked myself, all right, we're in a free fall to the downside. Do I want to hang on to this without having access to the screens, or is it time to take some profits? I decided to take some profits on the rationale that we're in the oversold area. We are a good distance away from the T-line. When was it time to take profits this afternoon if you wanted to get out? Well, that's again where I go back to my 10-minute chart. Ooh, and that's not the 10-minute. Oh, it is a 10-minute chart. I must have been even looking at the 5-minute chart. What? I don't even know what I was looking at. Anyway, somewhere along, I may have had it on the 5-minute chart when I was watching it. I think it was right in here. I was still short right in here, and when they popped it back up here, I said, all right, let's just take profits because we're near the end of the day, a big down move. And then after I got out, then they skyrocketed, so I retained a lot of the profits. But this is why I use the 10-minute chart to tell me what's actually going on an intraday basis. So I made good profits on this trade. Could it go lower tomorrow? Sure, but the probabilities are now getting starting against me. Where it closed was right up here someplace after hours. So why risk it? I'd rather have the money in the account. I'll be back in a couple of days, and I'll be able to see or watch the charts and let them tell me what's going on at that time. Now, this is one I wanted to show because notice where, look at the inverted hammer doji, left-right combo, and when it got up to the next resistance level, notice what it did up here, just a series of dojis. So this is why you want to analyze what the chart is telling you and where it's telling you there might be a reversal. They couldn't get through the 50-day moving average on the live cattle chart. This was a good time to be going short, and there hasn't been anything yet to tell us that there's any change of investor sentiment. Victor, I'll get to that. We look at lean hogs. I don't know why they call them lean hogs. I guess just for all the diet people to still eat bacon. So this is an important element right here to see what type of trading is going on at a potential resistance level. This is also what we call the blue ice failure, where it failed the 50, bounced back up, failed the 50 again, which makes the 200 our next target. And this is, again, where it comes into play of what type of trading is occurring when it gets to the 200. Well, you can see they didn't stop there. We're still in a downtrend. So, again, this was the important message right here. Overbought condition, indecisive trading at a resistance level, and then notice what happened. After 4 or 5 dojis, they closed it back below the T-line. This was the time to tell you, or that told you pretty much they failed at the 50. This is essentially why I went short coffee the other day. Because notice what happened when it got up here to the 50. Notice all the tails to the upside, which just logically tells you that every time the bulls were trying to push it up, the bears were knocking it down, and they finally failed here at the 50. Where's the next logical target? Probably back down into this trend channel down in this area. So that could be. Let's see. Yes, Galen, isn't that something like, what do you call a girl with one leg longer than the other? Eileen. Let's see. Yeah, so you got kind of an inverted J-hook pattern going here. And let's see, we did, let's see, oh, we haven't done gold. Gold. That's not working out right. Let me see, whoops, F.GC. Notice it broke this level with a gap up through that level. Now you're in the overbought condition. If I owned gold, my stop would be right here tomorrow. Wouldn't want to see it come back to that level. Why would that be a warning to do that? Because we're in the overbought condition, and notice where they took it up today. They gapped it up in an overbought condition. Anytime you see that gap up with stochastics in the overbought area, start watching for profit taking. Comes back to the very simple premise that has been put into graphic illustration for us that the Japanese rice traders say, where do most people buy? They buy exuberantly at the top. That's why when you see a gap down at the bottom, you start looking for buy signals, because where do most people sell? So let's see. All right, let's take a look at some of the stocks that are still showing interest and have patterns to them. BBSI was up nicely today. And notice, again, this is why knowing what the nature of each candlestick signal reveals something to you immediately. Notice on the pullback, decisive as far as selling, and as soon as they hit the 50, they took it right back up again. So you've got your wave 3 in progress with the prospect that wave 3 could come all the way back up here to fill this gap. Now, will it get there? Who knows? But at least we have a target. At least we have reasons for it to get there. And right now we have a pattern that tells us the bulls have taken control. You definitely want to stay long on this until you see a sell signal. Now, that sell signal may occur right here, or it may occur right here, or it may occur right here. But at this point, is this worthwhile to buy? Yeah, definitely, there's a good percentage move that could make this worthwhile. How about the grains? Yeah, right now the grains are kind of soggy. Soybeans have broken out through this congestion area, but not with any great decisiveness. And wheat is still pulling back, but it looks like it did a little doji harami today, and after hours it's trading up a little bit. So there's good prospect that it'll bounce up here to the T-line. I haven't looked at corn in a while. Corn may be also, I wouldn't go after corn with any great aggressiveness until it breaks this little downtrending channel. All right, we recommended PTCT today because it was coming out of this fry pan bottom. Now, remember, when we're buying a signal, we're looking for the stochastics to be down in the oversold area. Fry pan, J-hook, cradle pattern, scoop pattern, they can all have that, the stochastics up in the overbought area, because that's where the enthusiasm, the investor sentiment building up, this is where the enthusiasm will come in with good strength up here in the, coming out of where we can see how the investor sentiment has been building up. Now we got kind of a doji sandwich potential, which means if this opened positive and does a day like this, it's well breaking out through this resistance level in here that we're probably in wave 3 to the upside. So that's why it's good to know what type of signals and patterns are created by the candlestick signals. Isn't that an evening star potential? Yes, it is. But remember, an evening star potential, you still have to calculate or at least assess that you're coming out of a fry pan bottom. And what do we expect coming out of a fry pan bottom? We expect big, strong price moves. What would a failure be? Failure would be coming back and closing back below the T-line, because that would break the trajectory of this fry pan bottom. And if I could skip ahead here. So Choi was one of the ones that we had been watching because it had a fry pan bottom. But today you should have been out of it, because with that big selling day, closing back below the T-line, you pretty much broke this fry pan bottom trajectory. You want to close out that position and move on to something else. Let's see. So the signals and the patterns all combined. There's our fry pan bottom. There's our J-hook pattern setup, which is our classic pattern, which is fry pan bottom creates a very strong price move. J-hook pattern. What's the prerequisite for a J-hook pattern? A very strong price move. Now it looks like they've kind of supporting here on the T-line. If they start moving this again, that if this was a 5.5 to 9, 3.5 points, 3.5 points out of here takes you up into about the $11.50 range. That was VMIC. Now there's also times when you've got to be a little bit cautious, like today on SRNE. Notice it popped back up, but it didn't do it with any reversal signal. So now we have to be very careful to see what it does tomorrow, because if it closes back below the T-line, it tells you that this was just a pop-up during a downtrend. Why do we think this is a downtrend? Because you had a huge, big bearish engulfing signal after a big up day. That tells you there's been a dramatic change of investor sentiment. So if you covered your position on this one, get ready to re-short it if it opens and starts trading lower tomorrow. And we'll get to some more of those here in a little bit. Now, some of the biggies, such as Netflix. Netflix had that good little setup, which was a hammer, close up above the T-line, and then confirmation today. And then I think after hours, they must have reported earnings. They were trading up here someplace. So this still represents a change of investor sentiment. Lots of little indecision down here. So just, again, puts you in the right place at the right time. Up to 400, okay, up near the 200-day moving average. Oh, SRNE, there was no reversal signal. This is not a reversal signal. This is just a down or an up day and a downtrend. There's your reversal signal, a big, huge bearish engulfing signal. I hate that thing. So I'm always a little bit more leery. If I had closed out the position today, I'm ready to re-short it if it opens lower tomorrow. What else do we got here? We also recommended NMM, because here's what we call the bobble. There's your strong move. Your little trend kicker breaks through this downtrending channel. Where's your first resistance? The 50. But notice when it pulled back from the 50, what it didn't do, really couldn't close below the T-line. And then when it came back up the second time, that's when you want to be buying, because that told you the first time the 50 was acting as resistance. Now we have our J-hook pattern in progress going through the 50. And if they open this positive tomorrow, you want to be buying immediately, because now you have a doji sandwich setup, which if this day right here and this day right here are equivalent, you've broken out through this level, making this your next target, filling the gap, and then potentially the 200-day moving average. Yeah, kind of a T-line crunch. And that T-line crunch will be effective when you see what we call the bobble, where it comes up here and bobbles for a little bit and then takes off again. ADXS had a big bearish engulfing signal, but notice what it's done. It's come back to the T-line. So the T-line has been very effective for this uptrend, So we have to see what this does tomorrow. If it opens, it needs to open positive and trade positive to stay in it. If it opens lower, it's doing two things. First of all, it's confirming the bearish engulfing signal. And secondly, it's telling you that the T-line is now not acting as support. You close out the position. What's the worst case scenario? They take it down for a couple of days and then bring it back up. You can always get back in it when it comes back up through the T-line. CSTM, we recommended this a few days ago. There's your fry pan bottom. There's your bigger fry pan bottom. And notice what it hasn't been able to do. It hasn't been able to close back below the 50 and or the T-line. To be a buyer of this, I would just, let's make this bigger. I'd put a buy stop right here at 18. If it comes up through there, it's telling me the J-hook pattern's in progress. And if it gets up into this area, it tells you there's very little resistance over here. This could pop all the way up into the $21 range. Let's see, AMBA. AMBA, this is one of the charts that, or a chart like this just tells you where is this trend. This trend is in an upward trend channel. Did a little bullish harami yesterday and gapped up today. Where do you think the next logical target is going to be? Probably at the top of this trend channel. So on a short-term trade, you can pick up pretty much a 10% move on a high probability trade setup. Let me see if I can do this without screwing up too many things. That's one potential channel. There's another potential channel. So even on this one, if over the next few days they brought it up into this range, you've got a good 10% move, which for an option trader, that would turn into about 100 or 120% profit on an option trade. All right, we've been staying with NC because it's had a nice, every time it comes back, hits the T-line. Again, this is why we want to see what type of nature or what type of characteristics are built into these signals at important support and resistance levels. Lots of indecisiveness when it comes back down to the T-line. And they tell us they're taking it back up again. Bring it back down to the T-line, tells us they're taking it back up again. Can you please explain how to use stochastics when they are between the overbought and oversold area? Well, in candlestick analysis, just common sense says if you see an oversold condition, means stochastics in the oversold area, and a candlestick buy signal confirming, the probabilities are you're in an uptrend. Same scenario on the downside. If you see a candlestick sell signal and a close confirmed in an overbought condition, more than likely you're in a downtrend. So if you're in between and you see a potential sell signal, but your stochastics are heading up, you've got to give it a little bit more leeway in the kind of the analysis that if your stochastics are heading up and you're seeing a sell signal and you're not anywhere near the overbought area, you've got to use some of your other parameters like the T-line to tell you to stay in it. Oh, on AMBA, I forgot what I did buy. I think I did buy the 60s. I want to say I bought them for like $3.53. And for the short-term trade of that, if it does hit the top of this trend channel, that 350 of the next week and a half hits this area, that 353 should go up to about $8 or $9, based upon what the top of the chart channel is, and that we are in a channel and we are seeing bullish signals. And as we can see before, it's in a channel until we see something differently. If I saw this come back and close below the T-line tomorrow, that's not the what I want right away, I'd probably close it out. But right now my anticipation is we should be in this direction. So this is another reason that some people have a little hard time getting into a trade because they say, well, the first resistance level isn't that far away, it might not be profitable. If the signals are telling you it's time to buy, you don't use the resistance levels to tell you don't get in because it might quit here. You watch to see once it gets here. Now, there are going to be quite a few that stop at the first resistance level, but we're buying on the basis that their buyers are coming in. We don't know how high a stock is going to go. On the other hand, a lot of people won't buy because, man, I could lose some money on this. If you know that your upside potential with the probabilities are in this direction, you could also pick out a spot that tells you where you should not be in anymore. In this case, I wouldn't want to be in if it closes back below the T-line. That tells me I don't have my pattern going in the direction I thought it was going to. I bought the February's, Ron, only because this price move should be occurring right now. So I want to get as much leverage as possible. As long as the February's are far enough away, which I think they are, they're still about, what is the date today? Today is the 20th. So there's still 2 weeks in January, and this is just great. I can't read this. There's 1, 2, 3 weeks in February. So we're 5 weeks away. So I'd be buying the February's. Now, if the February's were only 2 weeks away, and I thought this was my upside potential, that becomes more of a spread strategy than a just buying the calls outright. But that's a whole different conversation. We will do an options session here as soon as I get back from New York. There are 3 or 4 rules used on a stop placement. Can you have them written somewhere for incorporation into my trading rules? Yes. I discovered last night that I have different rules that I just kind of generally tell everybody that I will try to put them down in a much more defined manner. And stop losses are different when you're just opening a trade, like in a situation like this or a situation like this, versus in a trade that's already moving. So I'll try to put that together. Okay, so what were we looking at? You're looking at INSEE, which has a good looking chart, and then the other INSEE, INCY, also has a good looking chart. And notice where it's trying to bounce, right off the 50. So you've got a wave 1, wave 2, rounding bottom. I would be looking at this one also for a breakout into wave 3. The airlines are picking up some steam. Here's Delta, nice J-hook pattern with a left-right combo. Let's make this bigger where we can see it. Now, for those new folks, the left-right combo, I've done a video on the signals and patterns quantified, meaning a lot of people ask, which are the strongest of all the signals? And the answer is usually none of them are any stronger than each other. It all depends on where they occur and what the market conditions are. Other than the kicker signals, usually represents a very strong change of investor sentiment. But there are signals and patterns such as the left-right combo is a very strong reversal signal. The doji followed by a gap up, your best friend, is a very strong reversal signal. Those are number 1. Best friend's number 1. Left-right combo is number 2. Then a fry pan bottom breakout, a J-hook pattern breakout. So I've got them quantified with a combination of about 18 different signals and patterns. So the left-right combo is a doji followed by a bullish engulfing signal. That's usually a very strong change of investor sentiment because that doji is day of indecision. The bullish engulfing signal is very strong decision. and then they gap it up the next day, you'll definitely want to be a buyer, because what they're telling you is after a potential reversal signal, not only did they tell you they're in here bullishly, but they're in here excessively bullishly because they gapped it up through the T line after a buy signal and broke this little downtrending channel. This tells me my next target is somewhere up in this range, the same trajectory before this little pullback occurred. And American Airlines, same scenario. Notice what happened when it got back down here to the 50. Indecision, indecision, hammer, gap up through the T line. You're right here at this little downtrending channel. If this opens positive, your next target is up here someplace at the first move, and then it could get right back into that trend channel as it was before. Yes. No, a bullish engulfing signal only has to engulf the previous day's body. Tails aren't considered. Now, if it does completely engulf the tails, that's even more indication there's been a strong change of investor sentiment. I see RSI at the bottom of your charts. I know how to use it. How do you use it? This is actually stochastics. Oh, I don't know how RSI got on there. I don't use RSI. And for the life of me, I don't even know how it got on that chart. So I can't help you there. I don't use RSI. Now, some people do use RSI, same as stochastics. Gremlins, that's right. Where would you put your stop? Back below today's open. Because if this gap up told us the bulls were now in control, if they closed it back below the gap up and the open of this candle, it tells us the bears are still in control. Let's see what else we got. All right, GFIG. Now, this is the nice thing about the chat room, is I would have never discovered this one until somebody pointed it out today. And what does this have the makings of? There's that slow curve, and there's your doji gap up right at the resistance level. This one's got, the slow curve usually creates a very strong reaction to the upside. So I wouldn't be afraid to be buying this one on positive trading tomorrow. Now, when I say I wouldn't be afraid to be buying this one on positive trading, that's because the expected results of this type of pattern is usually a very strong price move. So if the market is up tomorrow, not even if the market is up tomorrow, even if this opens positive and starts trading positive tomorrow, I'd be a buyer. I'd use the halfway point of this candle as my stop. I wouldn't want to see it close back below this level. So part of my stop loss, which I'll write down someday soon, is that if this is a candle that told me the bulls are in control, that if the bears could close it more than halfway down, that means the bears are still in control. It doesn't mean this isn't still a good pattern. This tells me the profit taking is going on, and I have to wait for that top profit taking to be over. Also, intraday, if this is the candle that told me the bulls are in control, I don't want to see it at all trading back below the open, because that's a lot of weakness for a stock that's supposed to be going much higher. BBB offered 6.5. All right. Okay. All right. Thank you, David. But notice what I take it for granted they offered it today. Don't you think somebody might have had a little inkling of that going on here? Now, I didn't, but this pattern tells me something positive is happening. And the result usually is you're going to be in the right place at the right time. How long is starts to trade positive? Anna, that's part of our entry and exit strategies session. And there's kind of 4 quadrants on entering a trade the next day. If you see a buy signal and you want to see it confirm, if the market is opening positive and the stock that you are looking at is opening positive, that's good confirmation the bulls are there and confirming that signal. If the market opens positive and the stock you're looking at opens lower, then you don't want to jump in just yet. But if it starts coming back up through the open of the previous day after opening lower, that tells you the bulls are still there. You can be buying at that point. If the stock is opening higher and the market is opening lower, you don't have to jump in right away. You just sit and watch to see whether the buyers are going to still come in. And this is where I'd rather pay up knowing that the bulls are still there. Or if the market was down and it opened higher, I'm going to wait to see whether they're backing off because the market's opened lower. But if not, if they're still buying, then I can jump in. And then the fourth quadrant is if the stock is opening lower and the market's opening lower, you don't do anything. You don't want to be in that nothing is confirming that day. A slow curve usually is fairly quick, and it usually occurs in an uptrend. The rounding bottom or the fry pan bottom is usually at the bottom of a trend and starts a big trend. And the J-hook pattern is a much shorter term with a much stronger price move here and then pulls back. And I'll show the, I'll try to show the J-hook here pretty soon. UVE, another one that's got kind of that slow curve and breaking out through this territory. You could be buying this one just using today's open as your stop. You wouldn't want to see it come back through there. RGR. This is a bullish Harami right smack dab on the 50. So this is not an uncommon chart I'm going to say analysis. They come up through a resistance level. They come back. This resistance level acts now as support. That tells me my next target is filling this gap and or the 200-day moving average. CLDX bounced off the 50, did a left-right combo, broke out. This tells me there's a lot of strength. Wave 1, wave 2, going into wave 3. All right, the golds have good-looking charts. This is the bullish 3X gold miners. There's your cup, there's your handle, and this is, again, in that cup and handle, you can analyze. They broke through the 50, came back, the 50 acted as support. They're still heading up. You stay long on this one until you see a sell signal. And what was the other one? Nugget. Nugget, there's your cup and handle, or your fry pan bottom, J-hook pattern. They're gapping this one up, means there's still strength, but you're in the overbought area. Just for safety factor, I'd put a stop at today's open. It shouldn't come back down through there. If it does, it means they're probably coming back down to test the T-line. Oh man, I've gone way over time again. Son of a gun. Scamp broke out today. This one you can be buying. The slow curves. This one I'd call a slow curve. This whole bottom I'd be apt to more call it a fry pan bottom, even though it's not consistently rounded. But when it broke out here, notice what happened. You had a very strong slingshot effect. Would you buy options on one of those? That's the whole point of learning what the signals and patterns tell you, is it puts you, oh, I don't know whether I'd buy them now. It's probably got more upside. If you bought options on them at this point, you have to be a lot more nimble. Just be ready for some profit taking. Here's another little slow curve type setup telling you that the profit taking after this big profit taking, this told you the profit taking is over. You're still in an uptrend on this one. The fry pan bottom of CLDX was a fry pan bottom. UVLE. And we did Choi, which was a fry pan bottom. And this is why usually a fry pan bottom will work, but we can tell when it doesn't work. So if I was buying this one over the last few days, I'm out here because this is not what I expected coming out of that fry pan bottom. D-Frog. Same scenario. You had this big fry pan bottom and they gapped it up. This is a case where if they gapped this up and it started drifting off, I'd immediately have my stop right here at the last close, because if they were able to come back down through there, what did that tell me about my breakout? It didn't occur. Close out the position. Oh, that was that's it. We did that one. There's a kind of your slow curve T-line crunch. Notice how the T-line kept crunching this right up through the resistance level. And notice what it did once it broke out through the resistance level. We could see that it was being crunched up there. And notice where they opened this today. They opened it, they had closed it down here and then gapped it up and went the opposite direction, a kicker type signal. This told us that there's still a lot of strength coming out of that T-line crunch. And where's everybody watching? They're watching to see what happens when it gets to the 50-day moving average. This is the type of thing where even though it gapped up, a lot of people say, oh, I'm going to wait for a pullback. I'm buying immediately because I know that if they couldn't get through the T-line and they gapped it up through this level, they're going to be breaking it out with some good strength. Kicker signal, again, tells you there's been a drastic change of investor sentiment. This one's OUTR. That tells me there's probably a lot more downside in this one. Let's just do a couple more on the long side, and we'll do some shorts here in a minute. Tezar did a Morningstar signal. Now remember, a Morningstar signal usually occurs at the bottom of a trend. However, notice how slight this trend is, and then you have a Morningstar signal. That usually acts like a slingshot effect, just like a scoop pattern. I would suspect more upside to this, again, to the top of the trend channel. So I wouldn't be afraid to be buying this one on positive trading, once again, using the T-line as your stop. And EBIX, oh, this one was to illustrate that when you see that big move up and they trade it off, you need to see when the profit taking's over. Next day they started taking it right back up. That told you that immediate profit taking was over. And well, this is what I call the message. The message was it was going this way, and they took it up big on a big gap up. Remember, the bigger the signal, the more compelling there's been a change of investor sentiment. So this is one where I might not be buying here, but I would definitely be buying up here, knowing that the gap up told me there was going to be more upside. All right, those were longs. The same analysis of the signals and patterns can be applied to shorts. And there's your big left-right combo. There's your close below the T-line. There's your shooting star, failure of the T-line and gapping down the next day. You can be shorting this because what did it tell us about this? It told us they went up through the T-line and they couldn't stay up there. They closed back down. That means the sellers are still in control. This downtrend is still in progress. We shorted HLF today because notice what it couldn't do at the T-line. Kind of consolidated here a little bit. Still heading down. So what's the overall analysis of this chart? It's heading down. There hasn't been any buyers, and they still can't get this above the T-line. Where's their next likely target? It could be at the bottom of this trend channel, meaning taking you down into the $22 range. What strike did you buy on HLF? Oh, I don't remember that either. And it's not that I'm being evasive. It's just I make so many trades I can never remember what I did. I think I can't remember. It was either the 30 or the 35s. I'm sorry, the 30s or the, I'm pretty sure it was the 30s. Lori, yeah, I tried to, and I meant to today. Oh, I bought some calls today that I meant to put in, but then Lori, I'll try to do that. I keep trying to remember. Fortunately, I have Pat, Abraham, and Becky sending me reminders all day long of all the things I'm supposed to do, which unfortunately I forget to do most of those. Okay, that's how. Okay, so here's RCPT. Here's another case where when do you cover a short position? When you see a buy signal and probably a close above the T-line. We didn't have that on this one. GTLS was another one that we were short for a while. We covered the short on Friday because of the bullish engulfing signal in the oversold area with the anticipation they're probably at least popping it back up to the T-line, and we'll see what happens then. But we saw what happened then. They failed at the T-line and are heading down. This can be reshorted on a weaker open tomorrow, especially if it comes back down through this level. That tells you the bears are definitely in control. CSIQ. This is the type of pattern that I love because that's the slow curve in the downward direction. This is where they start pulling the plug and they can go bam, bam, bam and take them down pretty quick. That was telling you that investor sentiment to the negative side was building up and they slammed it. Notice how they slammed it, doing a bearish doji sandwich through the support level, telling us that they're heading down probably to the next trend channel. Yeah, it looks like a waterfall. Same scenario on CON. Apparently some of the retailers didn't do as well as I'd be shorting CONN right now on weakness tomorrow. Because notice the dumpling top, and you can tell a dumpling top because it's a slow rounding top, and you couldn't trade this one way or the other if you wanted to. Now we've discovered which way they're taking this indecisive rounding top. Even though we're in the oversold area, it's just like a fry pan bottom that's going to break out when the stochastics are in the overbought area. A dumpling top's going to break down, usually when stochastics are in the oversold area. And YNDX, for those of you in the option room, I would definitely look at the puts on this one tomorrow because you've had that kind of little trend kicker to the downside breaching this level. This could have another wave to the downside, that same magnitude, taking you down into about the $10 range. Who wrote that one? Terrible handwriting. TMHC. I was showing this one because this is where you observe the obvious. The more pieces of evidence you can put into a trade situation, you have a big, huge bearish engulfing signal at the 200, closed below the T-line, and it did it at the same level you had indecisive trading and took it down before. Notice today that there was nothing yet in this to tell you that there might be a reversal other than they might bounce it back up. But notice what they did today. They did a trend kicker signal telling you there's still a lot more force to the downside. And today's trading took you down below this support level, now heading much lower. HGG. There's that slow curve, and there's the slam. There's your bearish J-hook pattern, and they've passed the support level. So this is the nice thing about candlestick analysis. It tells you what signals are happening. Big bearish engulfing signal. They're slamming it. And what is that one? That's so. All the home builders over the last few days just got crunched. There's Ryland, left-right combo heading down. And when you see that the whole sector is getting hit, that means the big money is bailing out of everything. That's where you get confirmation that's got a sell signal, and they're selling off the home builders all across the board, you stay short until you see a buy signal. NAO, observe the obvious. Got a downtrending channel, failed at the 50. Evening Star failed at the 50. Where can this go now? At least to test this level, and possibly even much lower. So you stay short on something like this until you see a buy signal. And whoops, this is another home builder, I think. Yeah, that big left-right combo up there at the 50. They're in wave 3 to the downside. And XNet failed at the 50, came up. Notice all the indecisive trading here. Now you have your doji sandwich. Where's your next probable target? Let me make this more clear. If I can get those little things out of the way. We can pretty much see what the trend is on this one. And every time it gets to the 50, it fails. Next target is down here at this level. So when I see that as a potential target, does it mean it's going to get there? Definitely not. But it gives me incentive to say, all right, I like this short, because if it does work, it's going to give me a 45% return to the downside. There's going to be charts that look good that might give you a 4% return to the downside. I'm looking for the ones that have the big price moves that are going to head in the direction I'm looking for. So I guess with that, that's about all I've got tonight. So if there is any general questions on candlesticks, go ahead and ask them. How do you evaluate the best ones to short amongst the various ones you've shown? The ones that have signals, remember, we like the doji sandwiches, because what happens after a doji sandwich? It's usually more in that direction. This one, YNDX, like this one, because notice how they came out of this resistance or the support level. They gapped it through. That's telling me there's still a lot of force to the downside. Reversal signal. Reversal signal. Jerry. I don't understand reversal signal. Anyways. Okay, I say, please explain reversal signal. Oh, Jerry, that's the basis of all candlesticks right now, is that there are 12 reversal signals, basically 6 bullish and 6 bearish. That's the building stones, or that's the bricks and mortar of candlesticks. That once you learn the signals and understand what the signal represents, and that's the nice thing about candlesticks, is the Japanese rice traders didn't only show us visual recognition of when there is a change of investor sentiment, but they also explained how that signal was created and what was behind it, so we also knew what the investor sentiment was at that reversal. So that's a powerful combination. And then when you start adding the other indicators that work extremely well with candlesticks, like the T-line, that just puts you in the right place at the right time. And this isn't coming from me as a sage or any great investor. It's coming from somebody that was the worst investor in the world until candlesticks came along and just made a lot of sense. Do the markets sometimes get in a condition where the methodology becomes less effective until the market conditions returns to normal? Not really, Marty. Because out of somewhere between 8,700 and 10,000 trading entities out there, very simple scans are always going to find, each day there are more buy signals than I could ever handle, and there's more sell signals than I could ever handle. So it's now not a question of having supply and demand or having a big enough supply to trade. It's now having a supply to trade and being able to cultivate those with analysis to see which ones of those trades are going to be working better. So as we can see in the market right now, we don't have any real great trend. I mean, we don't know whether this market's heading up or heading down, but we're long BBSI because it's heading up. We're short True because it's heading down. So there's going to be very simple techniques or very simple scanning techniques to find enough bearish trades and bullish trades always. And so that's why the analysis of the market becomes your first criteria. If it looks like this, again, I might be 5 long, 5 short. If it looks something like this, I might be 8 long and 1 or 2 short at that time. Thank you, Pat. There's I think now we got up to 13 or 1400 pages on our website explaining. And so for some of you new folks, if you just can pop into the chat room during the day, you're going to get a lot of information, a lot of kind of, let's say, backup or confirmation of your learning process. And I tell people, this is not rocket science. This is just simple analytical visual tools the Japanese rice traders have used for the last 400 years, and nothing changes about human nature. It's always the same. Okay, Jim, let's go ahead and do the double line. And in 4.8 seconds, let's do another double line. All right, 4.8 seconds is up. All right, I'll try to do a lot of these quick. Now, remember, I'll be gone tomorrow, Thursday, and Friday, but I will try to get online during the day. If I can find a computer, I think my buddy has a computer at his place, and I will try to have picks out during that time. TZA, right now I wouldn't be long or short TZA. That's also moving sideways. And UPL, this one you stay long as it stays above the T line. CHSP, Chesapeake, yeah, I think there's rumors today that Chesapeake's going to be taken over, if that's just Chesapeake. But this one's got a nice J-hook pattern to it. You stay long on this one, especially if it comes back up through today's high. You want to be buying it, telling you you're in wave 3. HRTX, stay short until you see a buy signal. Where did this one fail? Right here at the 200 with a left-right combo. You stay short until you see a buy signal. Now, it did a hammer type signal today in the oversold area. If I was short and this opened positive tomorrow, I'd probably close it out with the anticipation they're going to at least bounce it back up to the 50-day moving average. Southwest, stay long. Left-right combo, gap up through the T-line. If it breaks this little downtrending channel, it's going to at least come back up and test the highs. And then if it breaks out through there, it should get on the same trajectory as what it was prior to the pullback. The VIX, just stay long as it stays above the T-line. Facebook. Yeah, this is what you want to do on Facebook, but it still has to get back up above the T-line with some enthusiasm. You can always re-short it if it opens lower tomorrow. EXK, whoops, EXK, yeah, I think this was one of Rick's recommendations. That's a good looking chart. Notice again the T-line crunch, pushing you up through the resistance level. Good prospect of it trying to get up toward the 200-day moving average. Siri, no, I wouldn't. You can't short it because it's below $5. But that one's more sideways. I wouldn't be long or short that one. I wouldn't be in it either way. XLE, I'd get ready to buy this one on positive trading. Your first target is to see if it can break through this little downtrending channel, which means probably up to the 20, and then see if it can get up through the 50. CLF, you stay long as this stays above the T line. VDSI traded a little bit positive today, but didn't show anything that was telling you there was a major change of trend yet. However, if this does open positive tomorrow, I'd close out the position and see what it does once it gets to the T line. CBRL, Cracker Barrel. Wouldn't do anything with this one until it can show it got up through the T line. And Nubo, stay long on this one. At this point, I probably wouldn't want to see it trade back below this level. That tells me they're coming back down to test the T line. And NVAX had a good chart only because it was in an uptrend. Notice right here it didn't do a reversal signal, it just came back up above the T line. So at this point it was getting a little bit funky, but it did pop up nicely. Where is it trading at this point? I don't know. IMAX also in a wedge, wouldn't be long or short. And Las Vegas Sands, this one I'd be more apt to go short on. You got this little slow curve. I'd be ready to short this one on weakness. Caterpillar, you stay short until you see a buy signal. Now I'd be ready, because you're in the oversold area and you've seen some little hammers, I'd be ready to cover any short positions if it came back up through today's open. That would tell me that at least they're trying to bounce up to the T line and then see what it does once it gets up there. Tazar, that's the little slingshot effect coming off the Morningstar signal at the end of a downtrend. And SOHU, Morningstar signal also. This one you can be buying on positive trading, probably using the 200 as a stop. It should be acting as support at this point. ATHN, same scenario. Morningstar signal. I'd be ready to buy this one on positive trading. Schlumberger. This one needs to open positive to stay in it tomorrow. If it opens lower, close it back out, telling you the T-line is still acting as a resistance level for this one. RRC, nothing here yet. Yeah, just nothing here. It needs to get back up above the T-line. Micron, stay short. If it opens positive tomorrow, anticipate a bounce up to the T-line, so you'd cover your short. If it opens lower, you stay short. And CYTR. Nothing here to get excited about. If this opens lower tomorrow, you close out the position. That tells you they aren't getting up through the moving averages. And VIMC, see, we did that one early, didn't we? Yeah, you can be buying this one on positive trading tomorrow. That's still a good-looking J-hook pattern. And LKS, another one. Well, all you can do is stay long as it doesn't close below the T-line. Apple finally bounced up today, but Apple's still in this downtrending channel. I probably wouldn't be trading Apple right now just because there's no direction to it other than a slow drift. SWHC, Smith & Wesson, get ready. This is a fry pan bottom breakout. Get ready for at least a 45 off of here. We did NC. NC, you stay long as it stays above the T-line. JetBlue, you can be buying this one on positive trading. That's a nice bounce off the 50 with buy signals. We did Nubo. Nubo short? Oh, just Nubo. Nubo, you stay long. Now, INFN short. You can, but you've got the same scenario here that it's going to move in the direction how they open it tomorrow. So, and I probably wouldn't short this until it started coming back down to the halfway point of Friday's candle. That would definitely show there was a failure at the T line. Pfizer, stay long, not a very exciting stock, but heading in the right direction. And Chesapeake, supposedly there was rumor that somebody is trying to buy them out. This one, you can stay long, just needs a little bit more oomph right now. Let's see, Halo. Halo, you can stay long, just don't let this one close back below the T-line. Now, more than likely, you're going to have some consolidation in here, but as long as it doesn't close below the T-line, you're all right. And Indy, you stay long, but at this point, I would probably use today's low or Friday's close as a stop. It shouldn't come back to that level. If it does, it's coming back down to test the T-line. TZA, nothing here, long or short. Wouldn't be in this one. Brocade, another one that I wouldn't be long or short. It's stuck in this sideways trading channel. At the breakout, which it could have done here, it came right back and did a left-right combo, told us they weren't breaking out. I'd be trading something else. And Fold, nothing here yet either. Looks like it's supporting on the 50, but you need more confirmation to start buying, which is strength from this level. ACHN really hasn't done too much of anything. Still wouldn't be doing this one because it's sideways. I would rather be looking at it up here at around the 1570 level, knowing that it's breaking out to the upside. Did CLF, CNET. This one, you get ready. There's that slow curve breakout. Look for a 45 degree, probably even more than a 45 degree. I'd still be buying this one on positive trading just because of that slow curve breakout. Corning, nothing to get excited about here either. There's just no direction. Nubo, we did, forgot what I said. Nubo, you just stay long. Probably use the T-line as your stop. Could use an Apple. See Apple as kicker signal off a double, triple bottom. No, not necessarily. First of all, kicker signal usually has a bigger signal. And secondly, a true kicker signal shouldn't have a tail to the downside. This is just kind of a pop-up. It's probably bottoming here, but it's still in this downtrending channel. So even if it does move, you're going to run into your first major resistance right here at the 50, which is this downward trend channel. I'd rather go after it at 113, knowing it's broken through this downtrending channel. That's when the activity will start. Netflix, as we said, it started off with a nice little rounding bottom, little doji gap up. Somebody said it was trading up here at 400 right now. Oh, silver. Whoops. Oh, we can do silver here. Silver, these are the trust shares, and silver itself on the March contract still heading up. I would anticipate they're going to try to climb up toward the 200-day moving average. Next P, nothing real exciting about this one way or the other, just kind of a sideways that needs to break out. Let's see, SWKS. All right, that one's better. That's the best looking one of them with a left-right combo gap up through the resistance level. I'd rather play that one. And AMPI, Is that the right chart? I thought AMPI had a much bigger day. Notice the profit taken, and the next day they gapped it up. You stay long on this one. Big fry pan bottom, breakout, trend kicker. I would still suspect the 200-day moving average as being the probable target. Best Buy, stay short. You had the kicker signal to the downside. You haven't seen anything to stop that that investor sentiment. Vivas, nothing here. Wouldn't be long or short. I'd be someplace else. Just no direction to it. TNPX, nothing here either. As far as a buy, you still have to wait. You have no signal yet confirmed. It has to close above the T line to really consider it. And BABA, I wouldn't do anything until it does close above the T line, then it needs to break that downtrending channel. Is your session from Wednesday night on setting stops available for viewing? CJ, it should be. If you're having troubles finding it, just email Abraham at candlestickforum.com and he'll get the link to you. Okay, guess that's about it for tonight. Again, I'll be traveling tomorrow, but I will try to get online somehow tomorrow night and during the day on Thursday and Friday. So I know my buddy has a very slow internet connection, so hopefully it will work. All right, thank you, everybody. We'll see you in the chat room sometime.